Picture a 72-year-old Pakistani uncle living in New Jersey. He has been holding a green card for 14 years. He receives Social Security. He has a modest pension. Every single year, his son prepares his taxes, enters the standard deduction, submits the return, and that is it. Nothing else. Last year, his tax bill came to $200. But when I explain the three things I am about to share with you today, he went back and refiled his 2025 return. The outcome was remarkable. That $3,100 liability dropped all the way to zero. And beyond that, he received a $70 of refund. Now, if this uncle had been taking advantage of all three of these credits and deductions for the previous 8 years, the total amount saved would have exceeded $47,500. This is not somebody else's money. This is your money. The IRS designed these benefits specifically for you. But the issue is that nobody tells you about them. Not your CPA, not your son, not the tax preparation software. Today, I am going to walk you through all three hidden credits, line by line, dollar by dollar, form by form. My name is Timothy. This is US Updates Hub, and this video could literally return thousands of dollars to your pocket. Before I get into the three credits, let me first explain why this problem exists. Why are millions of immigrant seniors across America overpaying their taxes year after year? There are 4 reasons. Reason number 1 is the language barrier. Most immigrant seniors, whether they came from Pakistan, India, Bangladesh, Mexico, the Philippines, or Nigeria, do not speak English as their first language. Tax forms are already bewildering for Americans who were born and raised here. For someone who arrived in this country at age 55 or 60, trying to read IRS instructions feels nearly impossible. So they depend on their children or an inexpensive tax preparer, or they simply use basic software. And every single one of those options overlooks the credits that were specifically created for seniors. Reason number 2 is fear of the IRS. I hear this constantly. People say, I do not want to claim too many things because what if the IRS audits me? Let me tell you something with absolute clarity. These are lawful credits. They are codified in the Internal Revenue Code. The IRS genuinely wants you to claim them. They published a dedicated page on February 19th, 2026, Tax Tip 2026-14, specifically informing seniors about these new deductions. Claiming what you are legally entitled to is not a risk. Failing to claim it is. Reason number 3 is that the One Big Beautiful Bill changed everything. On July 4, 2025, President Trump signed a new piece of legislation called the One Big Beautiful Bill Act, Public Law 2019-21. This law established a brand new deduction for seniors that simply did not exist before. It took effect starting with tax year 2025. That means if you already filed your 2025 taxes without including this deduction, you left money sitting on the table. And the vast majority of immigrant seniors have absolutely no idea this law was even enacted. Reason number 4 is that tax preparers do not specialize in senior credits. Most tax preparers, even the ones operating in your local community, handle hundreds of returns during filing season. They rely on templates. They do not sit down and ask, are you over 65? Do you qualify for Schedule R? Did you apply the new senior deduction? They simply process the numbers and file, and you lose thousands of dollars because of a 5-minute conversation that never took place. Now let me walk you through the 3 credits and deductions that can change everything. The first credit, and this is the most significant one, is the new enhanced senior deduction under the One Big Beautiful Bill Act. Here's what happened. On July 4, 2025, Congress passed a new law. Within that law, there is a provision stating that if you are 65 years of age or older, you are now permitted to deduct an additional $6,000 from your taxable income. If you are married and both of you are 65 or older, you can deduct $12,000. Let me say that again. This is $6,000 per person on top of every other deduction you are already receiving. Now here's the critical detail. This is not the same as the old additional standard deduction that seniors were already getting. That old deduction still exists for 2026. That old deduction amounts to $250 for single filers over 65 and $1,700 per spouse for married filers. That has not disappeared. This new $6,000 deduction is added on top of that. It stacks. So let me demonstrate what a single senior over 65 can deduct in 2026. That means the first $2,450 of your income is entirely tax-free. And for a married couple where both spouses are over 65, $47,600 of income is tax-free. That is exactly where the $47,500 figure in the title originates. If a married senior couple has been missing these combined deductions, the cumulative loss over several years easily surpasses $4,500. Now, who qualifies? The IRS states you need three things. One, you must be 65 years of age or older on or before the last day of the tax year. So for 2025, you needed to have turned 65 by December 31st, 2025. Two, you must possess a Social Security number that is valid for employment and was issued before your tax return's due date. Now pay very close attention to this. If you are a green card holder, you have a work-authorized Social Security number. That means you qualify. This benefit is not limited to U.S. citizens. Green card holders are fully eligible. However, and this part is absolutely critical, if you only have an ITIN, an individual taxpayer identification number, you do not qualify for this new deduction. The One Big Beautiful Bill specifically requires a work-authorized SSN. This is one of the changes in the law that treats ITIN filers differently. LULAC and ITIP have both reported that this law creates, and I am quoting directly, a parallel, harsher tax code for immigrant filers who do not have SSNs. But for green card holders and naturalized citizens, you are 100% eligible. 3, if you are married, you must file a joint return. You cannot file married filing separately and claim this deduction. The law specifically prohibits that. The phase-out works as follows. The full $6,000 deduction is available if your modified adjusted gross income is $75,000 or less for single filers, or $150,000 or less for married joint filers. If your income exceeds those numbers, the deduction begins to shrink. It reduces by 6% of every dollar above the threshold. So for a single filer, the deduction completely vanishes at $175,000. For a married couple, it vanishes at $250,000. But here is the reality. Most immigrant seniors I speak with have income between $20,000 and $60,000. Social Security plus perhaps a small pension or part-time employment. If that describes you, you receive the full $6,000. No phase-out, no reduction. How to claim it. The IRS created a brand new form called Schedule 1A. This form did not exist before 2025. It is where you report the senior deduction, the tip deduction, the overtime deduction, and the car loan interest deduction. All of these are new provisions from the One Big Beautiful Bill. Your tax preparer needs to be aware of Schedule 1A. If they are not, find a different tax preparer. This deduction is temporary. It applies for tax years 2025 through 2028 only. After 2028, unless Congress extends it, it expires. So you have 4 years to take advantage of this. Do not waste a single one. The second credit is one of the most overlooked credits in the entire tax code. It is called the credit for the elderly or the disabled, and you claim it on Schedule R, Form 1040. This credit has been around for decades. It is not new. But according to IRS data, fewer than 5% of eligible seniors actually claim it. That means 95 out of every 100 people who should be receiving this credit are not. Why? Because nobody informs them. It is buried deep in the instructions. Most tax software skips it unless you specifically check a box, and most community tax preparers do not even know it exists. Here is how it works. If you are 65 or older and you are a U.S. citizen or resident alien, which includes all green card holders, you may be eligible for a direct credit against your tax bill. This is not a deduction. A deduction reduces your taxable income. A credit reduces your actual tax dollar for dollar. That makes it substantially more powerful than a deduction. The credit ranges from $3,150 to $7,500 depending on your filing status. Here are the base amounts. Here. The calculation proceeds step by step. Step 1. Begin with your base amount based on filing status. Step 2. Subtract your non-taxable Social Security benefits and any other non-taxable pension income. This is important. If you receive $14,000 in Social Security and none of it is taxable, you subtract that full amount from the base. Step 3, then subtract 50% of your AGI that exceeds $7,500 for single filers or $10,000 for married filing jointly. Step 4, multiply whatever remains by 15%. That is your credit. Real example. Suppose you are a 70-year-old single green card holder. Your AGI is $15,000. You receive $10,000 in non-taxable Social Security. Base amount $5,000 minus non-taxable Social Security $10,000. Result: already negative, no credit in this specific case. But if your non-taxable Social Security is lower, say $3,000, and your AGI is $12,000, base amount $5,000 minus $3,000 non-taxable SS equals $2,000, minus 50% of $12,000 minus $7,500 equals 50% of $4,500 equals $2,150. Result: negative, no credit. Now here's where it gets interesting. If your Social Security is partially taxable and your non-taxable portion is small, the credit kicks in. And for married couples filing jointly, where the base is $7,500, the math often works in your favor, especially if one spouse has low income. The income limits are as follows. If your AGI is below these limits, you should absolutely run the numbers on Schedule R. Even if the credit comes out to $200 or $300, that is $200 or $300 directly off your tax bill. Over 8 years, that is $1,600 to $12,400 that you simply threw away. Who can claim it? You must be a U.S. citizen or a resident alien for the entire tax year. Green card holders are resident aliens. You qualify, period. How to claim it? File Schedule R with your form, 1040 or 1040 SR. The IRS instructions walk you through the calculation line by line. Or, and this is my strong recommendation, use the IRS's VITA program or tax counseling for the elderly, the TCE program. These are free tax preparation services for people over 60 and people with low to moderate income. There are thousands of VITA and TCE locations across America. You can find the nearest one by going to the IRS VITA locator tool at freetaxassistance4.irs.gov or by calling 800-906-9887. AARP also runs free tax preparation through their tax aid program. Call 888-227-7669. These volunteers are trained to look for Schedule R eligibility. Your community tax preparer probably is not. The third credit, and I call this the silent deduction because people claim the standard deduction every year, but they forget to add the extra amount for being over 65. Under current law, this has nothing to do with the new bill. If you are 65 or older, the IRS grants you an additional standard deduction on top of the regular one. This has been part of the tax code for years, but millions of seniors miss it because they or their tax preparer simply check the standard deduction box without adding the age-based bonus. For tax year 2026, the additional amounts are as follows, and here's a detail most people do not know. If you are both over 65 and legally blind, you receive this additional deduction twice. So a single blind senior over 65 gets $2,050 plus $2,050 equals $4,100 extra. Why do people miss this? Because on the tax form there is a checkbox that says born before January 2nd, 1962 for the 2026 filing. If you do not check that box, the software does not add the extra deduction. I have personally seen returns where a 70-year-old green card holder's son filed the return and never checked that box. 5 years of returns. That is roughly $10,000 in deductions that were never taken. And the fix is simple. Say, if you missed it in prior years, you can file Form 1040X, the amended return, for the last 3 years and get that money back. Now let me combine all three together to show the full picture for 2026. Single senior over 65, green card holder, income $35,000. Without these three benefits, the same person would owe approximately $2,600 in taxes. That is a difference of over $2,165 in a single year. Married couple, both over 65, combined income $55,000. 0. A married immigrant couple earning $55,000 a year, if both are over 65 and they claim all three benefits, can legally owe zero federal income tax. In over 8 years, the savings cross $47,500 easily. Now, I have to be honest with you because this channel is about protecting you. And the same law that gave seniors this $6,000 deduction, the One Big Beautiful Bill, also took away benefits from certain immigrants. The Institute on Taxation and Economic Policy, ITIP, published a detailed analysis showing that the House bill would, and I am quoting, create a parallel, harsher tax code for immigrant filers. Here is what changed. 1. The new senior deduction, the overtime deduction, the tip deduction, and the car loan interest deduction all require a work-authorized Social Security number. If you file with an ITIN, you are excluded. This affects millions of immigrants who are legally present in the U.S. but do not have an SSN. 2. The child tax credit restrictions were tightened. Previously, a child with an SSN could receive the credit even if the parent had an ITIN. Now, under this new law, the parent also needs an SSN. ITIP and the Center for Migration Studies found that 4.5 million U.S. citizen children could lose the child tax credit because of this change. 3. The law added a 5% excise tax on all international remittances sent from the United States. If you send money to your family back home, whether that is Pakistan, India, Mexico, or the Philippines, there is now a 5% tax on every dollar. U.S. citizens can obtain an exemption. Immigrants cannot. This is effectively a tax on being an immigrant who supports their family. 4. Education tax credits. The American Opportunity Tax Credit and the Lifetime Learning Credit now require SSNs. Students with ITINs are blocked. DACA recipients are blocked. 5. Premium tax credits for health insurance under the ACA are now denied to asylum seekers, TPS holders, DACA recipients, and anyone with deferred action. I am telling you this because you need to see the complete picture. The law gives with one hand and takes with the other. If you are a green card holder or naturalized citizen with a Social Security number, you benefit from these new deductions. You must claim them. But if you have family members who are on ITINs or TPS or DACA, they are being pushed out of the tax system, and that affects your family's overall financial health. All right, now the most important part. What should you do right now? Here is your 5-step action plan. Step 1. Check if you already filed your 2025 return. If you filed your 2025 taxes and you did not claim the new $6,000 senior deduction, you need to file an amended return using Form 1040X. You have until April 15, 2029 to amend your 2025 return. Do not leave that money behind. Step 2. Make sure the age 65 box is checked on every return. Go back and look at your last 3 years of tax returns. On Form 1040, there's a checkbox that says you were born before a certain date. If that box is not checked, your additional standard deduction for seniors was not applied. File Form 1040X for each year it was missed. You can go back 3 years. Step 3. Ask your tax preparer about Schedule R. Specifically say, I am over 65. Am I eligible for the credit for the elderly or disabled on Schedule R? If they do not know what Schedule R is, walk out. Go to a VITA site or an AARP tax aid location instead. These are free and the volunteers are trained for senior credits. The IRS VITA locator is at freetaxassistance.gov. The phone number is 800-906-9887. AARP Tax Aid is 888-227-7669. Step 4. Know your filing status and use it wisely. If you are married, file jointly. The One Big Beautiful Bill's senior deduction is only available on joint returns. Filing separately disqualifies you, and filing jointly gives you the highest combined deductions, potentially $47,600 for a couple where both are over 65. Step 5. Act before 2028. The new $6,000 senior deduction expires after tax year 2028 unless Congress extends it. That gives you 4 tax years: 2025, 2026, 2027, and 2028. If you miss all 4 years, you could lose up to $24,000 in deductions as a single filer, or $48,000 as a married couple. There is no way to recover that later. Look, I understand what it is like. You came to this country, you worked hard, you paid your taxes, you followed every rule, and now you are 65, 70, 75 years old, and the system is complicated, and nobody explains it to you in plain language. That is exactly why this channel exists. US Updates Hub is here to protect you. Not just from ICE, not just from CBP, not just from airports, but from the IRS too. Because losing money you are legally entitled to is just as dangerous as losing your green card. Today I showed you 3 credits and deductions. Number 1, the new $6,000 senior deduction under the One Big Beautiful Bill. Claim it on Schedule 1A. Number 2, the credit for the elderly or disabled. Claim it on Schedule R, up to $7,500 directly off your tax bill. Number 3, the additional standard deduction for seniors. Check the box on your Form 1040, worth $2,050 to $3,400 per year. Combined, these 3 benefits can save a married senior couple up to $47,600 per year in deductions alone. Over 4 years, that is potentially tens of thousands of dollars. Share this video with every uncle, every auntie, every parent, every grandparent you know who is over 65 and holds a green card or is a naturalized citizen. This information could change their lives. If you want me to make a video about how California and New York state taxes are different for immigrant seniors, type state tax in the comments. Like this video. Subscribe if you have not already. Hit the bell icon for notifications. My name is Timothy. This is US Updates Hub.